Paxlovid got off to a good start. First real quarter was 1.5 billion, then 8 billion, then 7.5 billion, and now we're down to 1.8 billion. So really ugly landing for Paxlovid. Although one must ask, like, I mean, how large did you expect this drug to be? But I thought they would have a softer landing than that. I guess with COVID disappearing, do you really need a COVID antiviral? Probably not. So, Paxlovid, we'll get to their guidance in a second. In fact, maybe let's go to the guidance now, because it was pretty. I think it's probably roughly in line with what people thought. It's probably a tad disappointing. I think some people, Pfizer bulls, probably thought we'd see more of a steady drop off in Comirnaty, which is their brand for the COVID vaccine. But it looks like Pfizer basically is saying that don't expect much from Comirnaty in 2013. And of course, bulls would say, well, they're being conservative. But I think the reality is they're probably not being too conservative. They're probably, let's see, my estimates are a little effed up because of the last quarter, but it's roughly what I was expecting. No kidding. That's a funny guess because I was just guessing. I bet something in this territory. Maybe less. I think I had a smaller number actually. Let's see. Yeah, I was probably more bearish than most. But Pfizer is saying they'll sell $13.5 billion of the COVID vaccine next year, which is down 64%. And they have some interesting assumptions there. Just some funny. Good morning, everyone. Some funny assumptions we'll get to in a second that I thought were really. I've never seen stuff like that before, but it sounds like Pfizer's assuming COVID will go away, which is good news for all of us. It's not good news for Pfizer, right? But it's good news for all of us. The less Pfizer makes in money, the less sick we all are, which is good. So they're saying Paxlovid will sell 8 billion, which is really weird because last quarter was pretty bad. In fact, it seems like it'd be really hard for them to sell 8 billion given they're not even run rating at 8 billion, and it seems to be dropping precipitously. So that seems like I'm not going to listen to that. That seems way too optimistic. But I'll give them a little benefit of the doubt and adjust my numbers to say 6 billion. I would think less than that, but I want to give some deference to their guidance. But I know that there's some downside risk to that. So they're saying that there'll be sales through traditional commercial markets. So that means that you will have to pay, or your insurance will have to pay for Paxlovid or Comirnaty. And I think what their goal is to actually charge insurance quite a lot more than they would charge the government. So they might get a lot less units and still be able to hit these numbers of 8 billion and 13, I want to say 13.5 billion. So that's the idea there. So I'm going to stay a little bit below those two numbers, but I think that's kind of where Pfizer is. Take a look at these assumptions. These are really humorous. These are normal things you would see, but now there's a 2023 guidance for Comirnaty, which is the estimated proportion of the U.S. population that receives a vaccine. So really interesting way to put it, 24%, 31% last year, decreased due to fewer primary vaccinations and lower compliance. Estimated number of doses per vaccinated person per year on average, 1.3. Estimated community market share, 64%. U.S. demand, 65 versus 92 last year, etc. So it'll be really interesting to see what'll happen in 2023. My guess is they'll probably miss these numbers, but getting management's tenor on the conference call will be pretty important. The site I'm using is my own site called Godel. It's in beta testing right now. We're looking at Pfizer's earnings report, which was just released. It's earnings season for any of you who are interested in finance. All right, Eliquis. Look, a little light maybe, a little light. Prevnar. Prevnar was Pfizer's biggest product for a while. Then COVID hit. Primary care, is that where we're putting Prevnar now? Ooh, big quarter for Prevnar. Probably some catch up now that COVID's kind of receding, but all right, Paxlovid. All right, Ibrance, this is their breast cancer drug. It's been a bit weak for a while. I'm surprised I had it growing because I think it's been shrinking a tiny bit. Vyndaqel, that's their big rare disease drug. It's now their biggest specialty care drug. So Vyndaqel, a great quarter, wow. Really big quarter there. Run trailing 12 months, or well, now it's just 2022 revenue for Vyndaqel, $2.4 billion, wow. Great product. Xeljanz has been a disaster as people get scared of JAK inhibitors now, or at least Xeljanz. Enbrel continues its decline to zero. Pfizer has ex-US Enbrel rights while Amgen has the US rights. Xtandi, which is not a good deal for Pfizer in my opinion. Xtandi just keeps nudging ahead a little by little. So that's, I think, a record quarter for Xtandi. Inlyta, ooh, big softness there. They may no longer be disclosing some of these, so we'll see. We're getting to products that are less and less important for Pfizer. The big ones are all, we've just looked through all the big ones. They have a bunch of biosimilars, which is kind of funny. And here's one, Inflectra, that seems to be declining pretty quickly. Ruxience, this is the Rituxan biosimilar. Ruxience. All the biosimilars seem to be quite weak. This was supposed to be a big market for pharma to sort of catch up with biotech, and it just hasn't seemed to be what anybody wanted. Sutent, which was one of the first kinase inhibitors, now generic. Oh, there's Oxbryta. Oxbryta is acquired in the Global Blood Therapeutics acquisition, GBT. I don't have a lab coat, that's funny. I wish I had a formula that allowed me to not sleep, that would be great. Let's see, do they call it immunoglobulins or do they just have, I'm not sure. They're Nurtec now, also as a disclosed product, so we got that. That is the drug they got from Biohaven. Nurtec, ODT, Vidura. My neck is still killing me. So I don't know what they're doing with, oh, there it is, immunoglobulins. All right, Premarin, a very old drug from the old company American Home Products, which very few people here will remember, unless you're a student of business or pharmaceuticals. American Home Products was a company from a long, long time ago, changed its name to Wyeth, and then was acquired by Pfizer. Premarin is estrogen, made from horse estrogen actually. Still being used, surprisingly, even though it causes breast cancer if you use it too much. Medrol 93. Nimenrix. I think that's a meningitis vaccine. I'm not sure. Lorbrena. That's a new kinase inhibitor for oncology. Lots of little products. Pfizer's like quite diverse with these bulky little products. I'm sure Pfizer would rather be a little more streamlined. And this is after their spin-off of Viatris or Upjohn, which created their merger with Mylan to create Viatris. So Pfizer earnings, reaction to the earnings, not really significant, kind of basically a non-event, but still very important for us analysts to look at very closely. Bavencio starting to get relevant in the PD-1 game. Maybe not too relevant, but starting to contribute a little bit. VFend 55. This is an old drug. Aromacin, another old drug. Surprised they still disclose Tobias. I bet that won't be back next year. Trazimera is their Herceptin biosimilar. You can see the biosimilars, just not doing that great. No other way to say it. Raftovi and Mektovi also suspect, and you gotta wonder if Pfizer regrets the Array acquisition. It's gonna turn out, I think, that Pfizer's COVID boom will not really have changed the company very much, which I think a lot of people will be surprised by that take, because it was an enormous amount of revenue, right? Let's see, for 2023 to the beginning of COVID, you're looking at $86 billion in revenue. But remember, that's not a high gross margin product. So they do have to split with BioNTech. So if you think about that plus taxes, maybe you're looking at 30 or 40 billion, but Pfizer is wasted, like the Array deal, right? And the Medivation deal. Pfizer kind of overpaid for a number of assets. So one would almost say that, COVID's going to basically be a non-event for Pfizer, which is kind of crazy to think about. If you had the biggest product in pharma history, and the problem is they just kind of squandered these cash flows, in my opinion, with kind of somewhat bad deals. Sometimes you have some pretty good deals too, but in general they've done sort of bad deals. I'm not sure they got a good deal out of Biohaven either, for example. Maybe there'll be variants of COVID, maybe there won't be. I mean, they're telling us that 2023 is going to be a pretty bad year. So I'm hoping COVID just goes away. But, it's certainly possible that, COVID will be here forever and there'll always be, a need for COVID products. It's possible, for sure. Okay, so quarter was 23.9 billion. Gonna make a few adjustments here for the other section. Let's take a look. Other specialty care, I think that's other hospital. Other primary, other infectious, center one. Oh, I gotta add Oxybrita. I saw a center one here somewhere, there it is. Oncology, and now Oxybrita, which is 73 million. Alright, so 24,290, I think I've got some mess up in here somewhere, small amount. Oh. I see it now. Okay. And Desponsa. Okay. 24,287 and 24,290. So pretty much the same number. They sometimes have a rounding thing, which is kind of annoying. Now let's look at margins. So non-GAAP cost of goods sold were roughly the same. Really big COGS difference for me because I didn't think Comirnaty would have the catch-up quarter that they had, so margin's a lot lower than Pfizer would have wanted, all the way down to 60%, which is kind of like when they had tons of COVID revenue. That's the kind of margins they had. Spot on the SI&A. We'll take a look at R&D in a minute. And then we'll take a look at taxes. Huh. It'd be interesting to see this income statement. Oh, this is the wrong quarter. Okay, good. Thought some of these numbers looked off. All right, 9475, 4414 is a little higher there. 656. Okay, good. I was very confused for a second how they could hit that net income number. Okay, here's R&D. 3615. And almost no taxes for Pfizer. Wow. Just amazing. Lucky dogs, huh? We all gotta pay taxes, but they're paying like no taxes. Oof. roughly a 12% tax rate. Can you imagine? Subscription plan for boosters. Yeah, I guess I'm having a hard time seeing how they can hit their guidance number. But, you know, I am more bearish on the COVID vaccine than, financially bearish at least, than I guess they are. So, but even with their numbers, it seems hard to hit what they're talking about. It could be new products. It could be Prevnar, RSV, etrasimod, meningococcal. It has to be these new products that'll meet the gap here, but I'm still short several billion. About 3 or 4 billion at least, so those new products might do 3 or 4 billion. We'll see. Yep, not a big reaction. Merck's Prevnar competitor. We'll just see how they launch. Pfizer's got a little bit of mind share. Prevnar. I think margins for Pfizer have to go up, kind of back to their old 80%. But I guess it depends on how fast COVID disappears. Okay, so this is roughly their guidance. $325 to $345. I've got $340. So yeah. I don't know. I think if you zero out the COVID products, that's kind of a decent way to look at it, to be honest. Then you'd have to bump the margins and adjust the costs, obviously. But now you're looking at, not much earnings. Let's see, let's bump these. You also have to look at the new products, because the new products are coming. And you could put kind of a little multiple on this number, which is $2. Looks like Pfizer's kind of a little overvalued regardless. Maybe fairly valued if you're lucky. Should we listen to the call? I have two screens. Oh, it starts at 10? Perfect. 3 minutes. Let's take a look. Nice. Yeah. So what's up? Check the outlook. It's tough. Trap classic. Yeah, it looks like a... I mean, I don't know if Pfizer's being delusional that they can hit these numbers still. To me, my gut reaction is that they're way too optimistic and that COVID will just disappear. But I've wanted that for a long time. Part of that is a psychological coping mechanism.
Good day, everyone, and welcome to Pfizer's fourth quarter 2022 earnings conference call. Today's call is being recorded. At this time, I would like to turn the call over to Mr. Chris Vivo, Senior Vice President and Chief Investor Relations Officer. Please go ahead, sir.
Thank you, Chelsea. Good morning. Welcome to Pfizer's fourth quarter earnings call. I'm joined today by Dr. Albert Bourla, our Chairman and CEO, Dave Denton, our CFO, Dr. Michael Dolston, President of Worldwide Research and Development in Medical. Joining for the Q&A session, we also have Angela Huang, Chief Commercial Officer and President, Global Biopharmaceuticals Business, Amir Malik, our Chief Business Innovation Officer, Dr. William Pao, our Chief Development Officer, and Doug Lankler, our General Counsel. Before we begin the call, I want to remind you of some logistical items. The materials for this call and other earnings-related materials are on the Investor Relations section of Pfizer.com. You see our forward-looking statements disclaimer on slide 3, and additional information regarding these statements and our non-GAAP financial measures is available in our earnings release, as well as in our SEC Forms 10-K and 10-Q under Risk Factors and Forward-Looking Information, and factors that may affect future results. Forward-looking statements on the call are subject to substantial risks and uncertainties, speak only as of the call's original date, and we undertake no obligation to update or revise any of the statements. With that, I will turn the call over to Albert.
Thank you, Chris. Hello, everyone, and thank you for joining us today. During this morning's call, I will touch on some of our highlights from 2022 and share some thoughts regarding Pfizer's exciting near and long-term growth plans. 2022 was an outstanding year for Pfizer on multiple fronts. We exceeded $100 billion in revenues for the first time in our 174-year history. We maintain our industry-leading clinical success rates and further improved our cycle times, which were among the industry's best. We were named to 10 different best employer lists, including those published by Forbes, LinkedIn, Glassdoor, and others. And most important, more than 1.3 billion patients around the world were treated with our medicines and vaccines, a truly humbling achievement. Our key growth drivers for the full year 2022 included global sales of Paxlovid, strong growth of Comirnaty in developed markets, the launch of Prevnar 20 for the adult population in the US, the continued strong growth of Eliquis globally, the strength of our Vyndaqel family globally, and the addition of newly acquired products, Nurtec ODT, Vydura, and Oxbryta. Looking ahead, we foresee strong operational growth of 7 to 9% in 2023, excluding revenues from our COVID-19 products and the impact of foreign exchange. We expect our potential new launches, newly acquired products, and in-line products will all contribute to this growth. These projections include our forecast for several important potential product launches, including our RSV vaccine for older adults, potential Prevnar 20 pediatric indication, and products and candidates that came to us through recent business development activities, including etrasimod for ulcerative colitis, migraine, and Oxbryta for sickle cell disease. We are in the midst of an 18-month period during which we expect to have up to an unprecedented 19 new products or indications in the market. 15 of these 19 are from our internal pipeline, with the remaining 4 coming to Pfizer, as just explained, via the recent business development deals. Recognizing the importance of these potential launches, as well as those expected in 2024 to both Pfizer and the patients who rely on our innovations, we are increasing the support we are putting behind them by investing an incremental $1.3 billion. Dave will provide more details in these investments during the presentation. One example of a product that is already benefiting from this additional support is Cibinqo, which recently has seen an improving growth trajectory that we expect to continue through the course of 2023. In the fourth quarter of 2022, Cibinqo's new-to-brand prescriptions grew 84% sequentially, the fastest growth rate in the class. We have started 2023 with 55% commercial formulary access, and we expect that access to continue to improve during the year, especially with the upcoming expected expansion of the US indication to include adolescents 12 to 18 years old, if approved. We also introduced a new direct-to-consumer campaign in November, which has increased patient awareness of Cibinqo and led to more patients asking their doctors about it. We look forward to the expected US launches of etrasimod in ulcerative colitis and ritlecitinib in alopecia. Launch of Abrilata, our biosimilar to Humira, to further expand our franchise in immunology disease. Doctors are not only interested to hear this year's guidance, but also to understand the long-term growth prospects.
Oh, wow. 2030 non-COVID revenue.
Between 2025 and 2030, and our long-term projections for our COVID-19 products. We will try to address.
He's cutting out. I don't know why. It's very strange. Maybe it's my sometimes streaming while I'm streaming doesn't go well.
From our internal pipeline to generate 2030 revenues that will more than offset the expected LOE losses forecast for 25 to 2030.
25
The
billion.
potential
in
20
EVs.
billion
Come on.
in this chart is a risk-adjusted
So
number.
silly.
I would also point out that some of the potential launches are expected to be bigger contributors to our growth than others. And if all 15 were to achieve their full potential, this figure could go even higher. In addition, we believe we have the ability, if successful, to add at least 25 billion of risk-adjusted revenues to our 2030 top-line expectations through business development activity. As we have said previously, we believe the deals we have already done for Arena, Biohaven, Global Blood Therapeutics, and Reviral have the potential to get us more than 40% of the way there, with approximately 10.5 billion in expected 2030 revenue. I am very pleased to see that the analysts' consensus expectations for the 9.5 billion, closing materially the gap that previously existed between internal and external expectations. 4 of these products have already 23. We also have more than enough capital to invest in the additional opportunities needed to meet or exceed this target. And of course, we have many more potential vaccines and medicines in our pipeline, with numerous launches expected in the 24 to 2030 timeframe, if successful in clinical trials and approved.
More vaccines.
Some of the most promising assets include our oral GLP-1 candidate for diabetes and obesity. All of them are under this dotted box XP. Potential combo vaccines for flu, COVID-19, and RSV. Our potential vaccines for Lyme disease and shingles. Multiple new oncology product candidates, including IRV471 and our CDK4 inhibitor for endocrine receptor positive breast cancer, our gene therapy candidates for hemophilia A, hemophilia B, and Duchenne muscular dystrophy, our pan-hemophilia A and B antibody treatment, and many more. If approved, we expect each of these to be key incremental contributors to our growth aspirations through 25 and beyond. Even without any of these additional potential products, we expect our 25 to 2030 revenue CAGR to be approximately 6%. And if some of them are successful, the CAGR could exceed 10%. Not expecting 2023 to be a transition year, representing a low point in our COVID-related revenues. Let me provide a little bit more color on that. I will start with Comirnaty in the US as an example. In 2022, 31% of the population, or 104 million Americans, received an average 1.4 doses of COVID-19 vaccines, for a total of 144 million doses. Comirnaty's share was 64%, or 92 of these 144 million doses, as you can see in the first column. Purposes for COVID during this year. This drop is due to expected fewer primary vaccinations and reduced compliance with recommendations. We expect they will receive about 1.3 doses per person on average in 2023.
1.3
The drop
doses.
is because fewer people are expected to receive their primary doses, and for the most part,
On
only
average,
those who
how
are
many are you gonna get?
older or at higher risk are expected to continue receiving more than one booster per year. This should result in about 102 million total vaccine doses administered in 2023. We believe Pfizer will maintain at least its 64 market share and therefore expect about 65 million doses of the Pfizer-BioNTech vaccine to be administered in 2023. In 2024, we expect the utilization rates and market share figures to stabilize and come in roughly the same as in 2023. Then, starting in 25 and continuing in 26 and beyond, we expect to see an increase in COVID-19 vaccination rates, assuming the successful development and approval of a COVID-flu combination product. A successful introduction of a COVID-flu combo could over time bring the percentage of Americans receiving the COVID-19 vaccine closer to the portion of people getting flu shots, which is currently about 50%. Outside the US, we expect these general trends to be similar, with some variations from country to country. So, what does this mean for our revenues? We expect 2023 to be a transition year in the US. In 2022,
Oh, wow.
we sold at pandemic prices
Yeesh.
more doses than were eventually used. This resulted in a government inventory build
I wonder if that's
that we
bullish
expect to be
for
absorbed
Pfizer.
sometime in 2023, probably the second half of the year. Around that time, we expect to start selling Comirnaty.
So they're basically saying they're going to do like 20 billion in 2024. That is so weird.
Commercial price to remain relatively stable with only inflation-like price increases.
They're definitely not saying COVID's going away.
Now, let me briefly run to Paxlovid.
That's bullish.
In 2022, we estimate
It might
that
be delusional.
110 million COVID-19 symptomatic
But they're basically
infections
saying
were
COVID's here to stay
reported
for
in
the
the
next
world,
5-6
excluding
years.
China. treated with approximately 14 million oral therapy courses. Them with approximately 90% market share. Average was 86, but in the second half of the year, I exceeded the 9. Keep in mind that this reflects a full year of reported inflections, but only a partial year of Paxlovid.
Yeah, it's surprising that
Slightly at 2% annually due to waning immune protection of the population resulting from reduced vaccination rates. Similarly, we expect treatment rates to increase as awareness, education, and additional oral entries will grow the oral antiviral market.
pretty bullish outlook, gotta say.
Finally,
Pfizer might be
we
a good buy.
expect Paxlovid to maintain very high share despite additional competitive entries, given its strong benefit-risk profile and brand recognition. So what does this mean for revenues?
He's definitely Greek.
As with Comirnaty, we expect 2023 to be a transition year for Paxlovid as well. In 2022,
This is
we sold
either
at
very
pandemic
bullish or very
prices
delusional.
more treatment courses than were eventually used. This resulted in a government inventory build that we expect to be absorbed sometime in 2023, probably second half. Around that time, we expect to start selling Paxlovid through the commercial channel. We expect in years 2024 and beyond that the courses sold and used will align closely together within every year. There has been a great deal of speculation regarding the new but uncertain market opportunity for Paxlovid in China. So let me share what we are seeing. We have an agreement with one company to import and distribute Paxlovid in China, a local company, and we have a manufacturing agreement with another local Chinese company for Pfizer shipped only tens of thousands of courses to China in fiscal year 2022. From December, which is the first month of our non-US fiscal year, through March, we expect to ship millions of courses to meet local demand. We expect we will be able to sell effectively under government reimbursement through end of March.
I don't think
And
Paxlovid is going to be a great
China's
product
recent
regardless.
decision not to include Paxlovid on the country's national drug reimbursement list, we expect to offer the product on the private market after April 1st, unless, of course, a listing opportunity opens up before then. Lastly, I want to point out that while we are expecting increased utilization in all regions of the world as infections increase, we are not including any major non-US or non-China contracts in our 2023 forecasts. Let me close with a few thoughts regarding our scientific engine. R&D continues to be the lifeblood that fuels us as a company, which is why we plan to increase our R&D spend by at least 12.4 and 13.4 range, billions range. In addition to the increased investments, we are taking steps not only to further improve our industry-leading success rates, overall return on investment and R&D productivity. As you have seen in the last year, we continuously prioritize our pipeline to focus on the assets that represent potential breakthroughs and have the potential for generating higher returns, putting more capital behind larger opportunities like GLP-1, flu, elranatamab, and others. We are at an inflection point, and we are at an inflection point to act from a position of strength with our best-in-class R&D productivity, a robust pipeline of
Not best
innovative
in
assets,
class.
and one of the highest R&D budgets in the industry. With that, I will turn it over to Dave to provide details on our fourth quarter performance and our outlook for 2023. After Dave, Michael will provide an update on our R&D pipeline. Take it over, Dave.
Great, thank you, Albert, and good morning to everyone. Albert has already taken you through many of the key drivers of our full year performance, so I will focus my opening remarks on some key highlights from the fourth quarter. Revenues grew operationally 13%, primarily driven by Comirnaty's strong growth in developed markets, following the slowdown in deliveries that we discussed in the third quarter ahead of the rollout of the bivalent booster. We also saw very strong performance from Paxlovid outside the U.S. and the ongoing launch of Prevnar 20 for adults within the U.S. Excluding direct sales and alliance revenues related to our COVID-19 products, Pfizer's revenues grew 5% operationally in the quarter, and if recently acquired products from revenues were up approximately 3% in Q4. Reported diluted earnings per share this quarter grew 48% to 87 cents, while adjusted diluted earnings per share of $1.14 grew 69% on an operational basis. R&D expenses compared to last year's fourth quarter. Once again, in the quarter, foreign exchange movements significantly impacted our results, reducing fourth quarter revenues by approximately $2.5 billion, or 11%, and adjusted diluted 4% compared to LY. On a full year basis, foreign exchange negatively impacted revenues by $5.5 billion, or 7%, and adjusted diluted earnings per share by 36 cents, or 9%. Turning now to 2023 and the financial outlook for the company. Let me first point out that our approach to guidance in 2023 is fundamentally different than prior years. Given contractually secured. On a total company basis, we expect revenues of between $67 billion to $71 billion, reflecting an operational decline. Importantly, we expect that revenues from our business excluding COVID will grow between 7% and 9% on an operational basis in 2023. That growth is projected to be split between contributions from our new product launches, our recently acquired products, as well as our inline portfolio. The total company revenue declines are entirely driven by our COVID products, which are expected to go from their peak in 2020 to their low point in 23 before potentially returning to growth in 24 and beyond. While patient demand for our COVID products is expected to remain strong throughout 2023, much of that demand is expected to be fulfilled by products that were delivered to governments in 22 and recorded as revenues last year. Now, I want to point out that our total company revenue guidance range is wider than what is implied by the 7 to 9% operational growth rate range for the business excluding COVID. The wider guidance range reflects the potential volatility that we see in our COVID product revenues, given that they could be significantly impacted by factors outside our control, such as the infection rates and the severity of the virus, as well as the timing for transitioning to a traditional commercial model here in the US.